Okay, good morning, everyone, and welcome to what is now the 47th edition of the Coffee Microcaps morning meeting. You're all very welcome. We're just going to run through a couple of introductory slides, and then we're going to get straight into it with our first presenter. My name is Mark Tobin. I'm the founder of Coffee Microcaps. For anybody who is joining us for the first time this morning, you're very welcome. And to all our regulars, I know there's a good few signed up. Welcome back to this morning's event. Quick compliance and disclaimer. Okay, for anybody who is joining us for the first time, the companies we normally have presenting on here on a weekly basis are capped under 300 million in market cap. They're generally companies which are in revenue and approaching cash flow break even, or indeed are already profitable. We generally don't have companies from the resources and the biotech sectors. So it's everything else which I loosely term as industrial microcaps. So that could be microcap technology names, microcap healthcare names, microcap retailers, financial services businesses, and basically anything in that kind of non-resource, non-biotech sector. The structure of this morning's webinar, we've got two companies presenting over the next hour. It's going to be a 20-minute presentation and a 10-minute Q&A session for each company. If you do have any questions for our presenters, please type them in the Q&A box rather than the chat function. It just makes it easier for me to moderate the questions when we get to the Q&A. Please note that the webinar is being recorded and it will be posted on the Coffee Microcaps YouTube channel tomorrow morning. You can follow Microcaps. Twitter is probably the best place to get us at C Microcaps. YouTube, as I said, for the recording of this webinar and indeed all our previous webinars. You can also get us on LinkedIn. I also write a weekly paid subscription newsletter where I profile one interesting ASX Microcap story every week, and you can find that on the Substack newsletter platform. We're going to hand over to Grant Straker, our first presenter now, in 1 minute. And then after Grant, we have got Ganesh, Kumar, Bangah joining us from KL, who will be presenting on behalf of Netccentric. So without further ado, I'm going to stop sharing my screen. And Grant, if you want to start sharing your screen. Yep, you're good to go now, Grant. I can see the cover slide of your presentation now.
Hi, everybody. Thanks, Mark. Thanks for the intro. As I said, my name is Grant Straker, and I'm the co-founder and CEO, with the other founder being my wife, of Straker Translations. I'm in a hard lockdown in Auckland right now, so I don't look like my picture there. I look like a homeless person, I think, without having a haircut for 5 weeks and having to deal with my kids. So, yeah, I'm sure you're all familiar with that, as many of you will be in a similar situation. Hey, look, so Straker, I'll just start with the industry to start with. We operate in a multi-billion-dollar industry, which is the localization industry, and we have technology, a business model, and reach to disrupt this industry at scale. And hopefully in the slides that you will see coming forward, you'll understand how we're doing that and how I can prove to you that we're actually doing that right now. So one thing I want to do is just start with what we do. So we've built a technology platform over the last decade, which is a hybrid human AI-based technology platform that really is a productivity play in terms of how we disrupt this industry. And I think many AI-driven solutions, technology-driven solutions, will ultimately come down to how productivity is enhanced through the use of technology and how you get a commercial benefit out of that. So if you think in simplistic terms around translation, localization, you know, a machine can do part of the work, a human does the rest of the work. You automate all the flows out of systems so that you don't need humans to come and cut and paste and do all that sort of content work, and then you push it back in. So you streamline that process, and if you can do it at scale, you get some gains. So if we make translators go faster, then, and we pay them by the hour, and our technology increases the speed, then we are getting a margin gain at the same time. If we automate the process flows and don't need as many project managers and humans in that process, we also start to get some gains. So we're a global company with 240 staff in offices in 8 countries. We're a proven enterprise solution, which I'll talk about as we go forward. We have around about 10% of our revenue is SaaS. The other 90% is very high repeating revenue. A lot of translation work is project based, so it is repeating more than your typical SaaS model. We've got a clear pathway for growth. And look, in FY22, we've given guidance of 50 million of revenue, which is 60% growth on FY21, which I think is not that usual in this sort of space at the revenue numbers we're talking there for a listed microcap. So the industry opportunity, some of you may be familiar with others related adjacent companies in listed on the ASX in our industry. So localization industry is more than 50 billion. There's a few numbers that float around, but this is US is a big number. If you looked at that comparatively to other big industries, it's sort of 2/3 the size of the mobile gaming industry. It's 4 times the size of the cloud accounting industry. It's more than double the size of the global music industry. It's sort of half the size maybe of the global fitness industry. So it's a significant industry, and there are lots of people interested in this space because they can see that it is an industry that still has a large services component to it, and technology is going to absolutely start to really play a part in doing that. And if you look at the top 3 players are only 4% of the industry size, the top 100. I think we're about number 40 now, maybe up into the 30s now, only 18%. And then there's this 40 billion opportunity, as I see it, that is this sort of big services side of it. That there's not a lot of tech getting used, which is an opportunity for growth. So it's not so much about finding your competitors as it is about how your technology can start to really make an inroad into this other 40 billion. And the M&A market is very active right through the whole ecosystem. So to talk about how we can prove that our technology does what it says, or what I'm saying it can do. The industry average is around about 40% in gross margins. We make 57%. If you've got a $50 billion industry and you've got a 17% margin gain, that's quite substantial. So it is doing what we say it can do, and it is doing it at scale. So now I just want to talk a little bit about our growth, where we've come from. So we listed in 2018, had around about 25 million of revenue at that point, and we've given guidance of 50 million of revenue for FY22. So you can see a sort of steady increase and then a big increase. So what I feel we have done from the promises that we made at our IPO is actually delivered it then. We raised around about $25 million at IPO, and so we didn't give a timeline per se, but we said, look, we believe we could take that that capital and we can grow to be around about 50 million in revenue. Now, this is something that we've actually achieved, in sort of 3 years from listing. So we feel that we've delivered on the promise at the IPO. So what's driving that big increase this year? And that's what I'm going to talk about as we go forward. But if you compare us to the adjacent companies on the ASX with us, so you've got an Appen, you've got AI Media, you've got Dubba. I think Dubba trade at 10 times our ratio. So I think we're trading at about 2.4 times revenue. They're trading at 28 times or something like that. And we are roughly we've given guidance on revenue. We haven't given guidance on profitability, but if you look at the analyst reports, they're saying that we'll be on a smallish profit for FY22. So EBITDA profit. So again, we're there, and I compare us with some of the other companies and think, well, yep, there's more SaaS in their model, but from a revenue profitable perspective, big difference where we're driving. And so it's worth having a look and doing a comparison. And I think for understanding whether we make a good investment case right now, given what we've told the market, and maybe a lot of the market hasn't heard the story or understood. And so I'll get through and tell you what's driving that. So if you look at one of the big drivers for the growth this year is we closed a global deal with IBM, where IBM consolidated all of their translation and localization from 20 odd providers down to Straker. And that is fairly major. And they've done that off the back of our technology stack, our technology offering, and the way that we can automate and use AI in the translation process. So look, we used to work with them in one language, Spanish, and that was around about $1 million a year contract that we had with them, which we provided to them for the best part of a decade through a company that we acquired. And then, they've given us 55 languages. Now, all of those languages aren't the same size as Spanish, but there's some pretty significant ones in there that are. So, I guess the point is, if IBM can see that our technology can significantly enhance their processes, and actually, I think the words that they used to us was, they wanted to meet their customers on their customers' terms. So they needed a different way. They couldn't use the same way that they had provided translations for the last 20 years. They needed a way that was streamlined, automated, where they could do much bigger volumes, much faster. And so that contract started in January. And I think if you look back through some of our reports, you'll see just how much we're onboarding around that IBM story. And obviously it's given us a really good building block to go out to the rest of the global industry and say, if we're big enough to do it for these guys with 10,000 employees and the size and scale and the technology requirements that they have, we can do it for anybody. And it was probably the first big deal in the industry where a major user of translation services chose a disruptive player over a traditional legacy player. So it didn't go to one of the top 10 that it might have historically. It's gone to a disruptor. And I think that's a really big indication of the market opportunity and why so many investors, PE firms, and everybody else is so interested in this space right now, because they can see the disruption is going to be key. And I would like to feel that we are leading that charge right now. And we also acquired a company in January, a company called Lingotech, US-based. Now, they had some technology and some services. They had revenue of around about 11 million New Zealand, 5 million of that was SaaS. And they brought on board about 20 new enterprise customers. The largest one of them was Nike. They've also just recently picked up Panasonic. So some really big blue chip customers. And again, what they have is a technology solution that's slightly different to our core technology, our Ray platform. Our Ray platform is like a ride share. You just give us the content, we do everything, we give it back to you. Their technology solution is like a self-drive type solution where the likes of Nike want to run internal teams. They have their own translators. They want to go outside of our sort of translation ecosystem, for example, for their own reasons and the way in which they work. So it's given us a big inroads into that market with technology, as well as so complementing what we do. So a complementary acquisition of technology, but also an ability for us to get a bunch of new enterprise customers. So another big opportunity we have is to grow, the customer wallet with the huge customers that we have. You've seen we've just done it successfully with IBM, taking that wallet from 1 million to a significantly larger number. And we have a whole range of customers now that we know we're not the whole global supplier, but we can see that their procurement teams are looking for a global supplier. Maybe, going from 5 or 6, a different language in each region, to one or two suppliers. And so we are well placed, and we've made a big investment in our global sales teams to capitalize on that. So in such an enormous industry with so many inroads into a whole range of blue chip customers, it's a big growth opportunity for us. We've made 8 acquisitions to date, and those acquisitions have helped us onboard enterprise customers and also allowed us to put our technology in place and get some margin gains and contribution back out of those companies. And if I just refer back to the IBM story, part of that was we were big enough to deliver. So we had to acquire some companies to rapidly scale to make us big enough to deliver for these really, really large customers. We needed an office in Japan. We needed a good number of staff in the US. We needed to be able to deliver across all these European countries. So as we've acquired companies, we started in 2016, acquired a small language service provider in Ireland. And then IBM came because we acquired a company in Spain, and we've got a global relationship. And so as you can see, as we've gone through, we're acquiring these logos. We're trying to build the relationships. We're showing them what our technology can do for them. And it's given us a great on-ramp. And so we also see that this still remains part of our overall strategy for growth, along with significant organic growth. So IBM, for example, is huge organic growth now. So it was, acquisitive growth back then for MSS. Now that's just enormous organic growth. So that's our strategy there. As a company set up to deliver, we have we should have more staff than that now. I haven't updated this slide from the last time I used it. We have about 240 staff around the world. And a majority, New Zealand, I think Europe's now got a bit more than that, sort of 80 or 90. The US has got around about 60 or something at the moment. So we're investing around the world. We've got really good coverage. It allows us to do a follow the sun model. We've got a really good split between our production, our technology, and our sales. So if you look at it lumped together, the technology side of us is around about 30% of what we're doing. A little bit more production's now dropping down as we get more technology. So we've got a really good mix of investment in R&D, technology, delivery, integration, the people who are delivering it, the product team, and then our sales team. I'll cover a little bit about our ESG and governance. It's quite important, I think, and we see it as something that will actually drive investor engagement into STG. We're currently going through a B Corp certification. I don't think there's many ASX listed B Corp certified companies. And we can see that as really appealing. Having strong ESG credentials is really appealing, especially to millennials. Lots of funds now want to have that social context in there. So we tick a lot of boxes already around our environmental, social, and governance criteria. And I think that as we build this up and as we get more certifications, I think we'll start to have an appeal in certain indexes to certain demographics of investors, and that will drive, I believe, or we certainly hope, drive a lot of engagement with a whole range of investors to have an interest in our stock outside of just our growth story and our ability to deliver. So when we listed, we said that we had an aspirational target. Well, I said actually, we had an aspirational target to get to 100 million in revenue. This is when we're at about 25 million of revenue. So what I'm trying to do here is sort of just give a little bit of a roadmap about how we get there. When we're at 25, people would, if I go a year after we listed or 2 years before we sort of had this big growth spurt this year, people were wondering how we were going to drive how we were going to get there. I think now it's clear to people that they can see that we are heading towards that. So what I want to show you here is that if you take a simple model based on analyst forecasts, at the moment we've got our sort of I've got this around the wrong way actually. It should be contribution in white and OPEX in this color here. So apologies for that. That was a last minute slide adjustment. And if you look at our OPEX, it's sort of around about that 30-ish million with 57% growth margin. You can sort of do some simple maths and see that we're around about that 50. We capitalize a little bit of our development and some of our development, and we're sort of into a small profit based on what the analysts are saying. Now, we raised further $20 million a couple of months ago, and we're going to start to deploy that over the coming year. As we deploy that, we want to aim towards a $75 million target next, for example. So as we do that, if our OPEX remains sort of mid-30s, for example, and our gross margins remain steady, you can see the white, which is sort of the contribution, sort of EBITDA level. We should start to see some growth there into some sort of maybe early teens numbers, double digit, for example, if that model plays out in that way. And you can see that if we get to 100 million, and our OPEX remains steady, because we've got all of these efficiencies through our technology, through our ability to automate so much, and through the ability to win these large global contracts, and our margins remain steady, we start to really produce some sort of pretty decent EBITDA numbers. So again, this is an aspirational target. It's not a guidance forecast. It's just to help people model maybe how this can play out. And then the questions I normally get are, well, is your cost base going to grow at the same pace as your revenue? And I think what we're showing now is that that's not necessarily the case. And can our margins remain strong as we grow? And I think we've shown that consistently, that our margins have remained really strong. So that's, again, another box to tick that shows that that's part of our model. So look, just in summary, before we get into Q&A, I think our growth and our revenue is on par with some of the leading unicorns in the ASX. If I just take a look at sort of 60% growth and 50 million of revenue, that's not unusual. Sure, we're not a true SaaS company, and I get that, but even then, the delta between multiples and opportunity, I think, for investors right now is there. We have these margins which show that our technology is working and doing what we say it will. I think IBM you're not going to get a better proof point than delivering to one of the world's largest technology companies and then making a decision to consolidate everything down to a disruptive vendor. And I think if you look at across the portfolio and tech companies in New Zealand and Australia trying to win really large enterprise deals with the likes of that, it's not easy, and we've proven we can do it. We're investing heavily now as we're starting to see Europe open up. We're starting to see really good engagement across there. They seem to be operating in a very different COVID environment than the one that we're in Australia and New Zealand. We've got some M&A activities. We've said that we are in advanced discussions, or certainly in deep discussions with a range of M&A opportunities to further drive us towards that 75 million target. And we're at an inflection point where, again, we can grow and our OPEX can remain steady, margins stay strong, and our revenues grow. So we are running a technology showcase next. Sorry, just got my wife and kids trying to do some school in the background. This is I get near the end. Look, we've got a Q&A. We've got a technology showcase next Thursday on the ASX. So if you really want to take a deep dive and understand a bit more about us, have a look just at we put a market release around that up last week, and we've got really good sign-ups to that. I think 70 or 80 people have signed up. So we've got a lot of interest at the moment and people understanding a bit more. Look, and there's our contact details. So happy to get into any Q&A.
Thanks, Grant. We've got a few questions that are coming in here. First one, what multiples do you buy acquisition companies on versus the multiple that STG trades on?
Well, a lot lower. So historically, we've acquired them at around about 1x revenue, and that's been for companies sort of maybe 10% EBITDA type companies. We may go higher than that if a company was producing really strong EBITDA, for example. But that has traditionally been the range. It might, as I say, if a company's more profitable, it might go up to 1.5x, something like that. So yeah, certainly less than our trading multiple.
Okay. And then the IBM contract, is that volume based or a flat fee? And how long before you get the full ramp up of all 55 languages?
Yep. So the IBM contract is volume based, but we are given sort of forecasts on the volume of revenue to flow in. It should be fully ramped up as we go into next financial year. So say by the end of March, we have been really ramping up quite significantly. We've done 9 months of integration. There's a big change coming in the way that content flows through to us in October. That's the next pivot point. But we have released out in some of our other releases just how significant the on-ramp has been with IBM. So yeah, so we are certainly tracking along quite nicely.
And then the next one, the path to the 100 million aspirational goal, how much of that is organic versus acquisitions? And of the organic, how much is going to be, derived from that IBM and, greater share of wallet, like kind of replicating, I guess, the IBM history or evolution as a customer?
Yeah, look, so it's a great question because it's one of obviously really key to sort of the growth model that we operate. So it's going to depend a fair bit on what happens over the next sort of 12 to 24 months in terms of how COVID changes the market. M&A is still active, and there's a time cost sort of component to growth. If you in terms of we want to grow rapidly, we want to get access to these customers now so that we can do a sort of a land grab and start grabbing these large enterprises. And sometimes acquisitions can drive that. At the same time, there's lots of big organizations now looking to restructure their vendors in this space. So we've also got that opportunity. Look, if I said it was 50-50, is that fair? That's kind of the growth that we're seeing now is probably 50-50 in terms of FY21 to FY22. The growth component is really 50% organic, 50%. I'm just picking some rough numbers there. So is that how I see it? Possibly. Yes, I think that might be fair. Again, we would like to weigh more between to the organic. And we think that the market is right for that. But big contracts do take a long time to close, right? So we also want to keep the cadence going on the growth and drive it. So that's probably a fair number, I think.
Okay, and then I will squeeze in one more just before we get to our next presenter. Do you have an insight on the end use case for customer translation in your customer base? So I guess the end use case for one of IBM's customers, maybe.
On the end use case for customer.
Sorry.
Oh yeah. I mean, absolutely. Yeah. No. I mean, absolutely. So what you will see, I mean, if you pick a company like, I'm just thinking of one, Meditoya, that's a large Japanese industrial manufacturer of precision equipment. So what they're doing is they put out every month right across Europe, the latest product catalogs, the latest information, the latest all sorts of stuff that they have, plus all of the manuals that go with all of their tools, plus lots of other related things that need to be translated into 20 odd languages. And that ends up being really significant. So what might end up being a 10-page document is then suddenly translated into 20 languages just for the product catalog. It's more than that, actually. It's probably about a 50-page catalog. And then you've got all of the all of the instructions for this equipment and installation and user manuals and those sorts of things. So that's just one example. Many, and then they'll have contracts that they need to have done between cross borders, for example. So there is that type of use case. If you come to the deep dive that we have next week, we will be going through some customer use cases and how our technology actually helps do that. So yeah, so hopefully that's a good example. Yeah, so thanks for having us. I did see one more there, Mark. Sorry, around our break even. Hopefully the slide that I put up that showed that we're
I think you covered that in the slide. So maybe if a person maybe joined us a bit late, they can watch it back on the YouTube channel. Because I left that one because I thought you covered it pretty well in the slides. Yeah.
Look, so thanks for listening, everybody. As I say, if you go, it's on a market release. We've got the tech showcase. Not too bad. Only a couple of interruptions there from my kids' homeschooling. So it's actually a record, I think. And thanks very much, Mark, for having us. And I look forward to watching the next session now. Thank you.
Cheers. Thanks, Grant. And just on the B Corps, if anybody is wondering, some that came to mind when you were talking, I know Kelly Group and is a microcap that's ASX listed and B Corp certified, and then the big end of town, Kathmandu over in New Zealand, also listed on the ASX, and Australian Ethical is another one. I think that's also B Corp. If anybody wants to check that out from an ESG perspective, Grant, if you want to stop sharing your screen.
Yep.
And then
just on
sorry, go ahead.
Oz Ethical. I was going to say Oz Ethical also, became a substantial shareholder in Straker last month, actually. So just as you mentioned them on B Corp, I'll just throw that one in and I'll stop sharing and we'll leave it to you.
Okay. And Ganesh, I know, is standing by in KL. Here we go now. Yeah, I can see the cover slide of your presentation now, Ganesh, so you're ready to go whenever you are.
Sure. Can you hear me?
I can hear you perfectly.
All right, thanks. Good morning, everybody. Today I'll be presenting about Netccentric Limited, Asia's pioneering digital growth ecosystem. So Netccentric is actually an established provider of social media influencer marketing solutions, and we're rapidly commercializing an innovative social commerce platform. We have end-to-end expertise spanning influencer marketing, social media marketing, performance marketing, video and content creation, as well as social commerce. We use data and insights to grow diversified revenue streams by basically empowering communities with our innovative digital platforms. Today, we have over 300 clients with more than 15,000 influencers across 4 offices with 102 employees in the group. We were EBITDA profitable in the first half of 2021, and we delivered a half-year revenue of 5.2 million this year, or half of this year, with a 60% year-on-year growth rate. The global influencer marketing platform market is actually a very fast-growing market. It's expected to grow from 6 billion last year to 24 billion by 2025, growing at a CAGR of 32%. Asia Pacific is a very social region, and therefore is set to lead the growth. We are basically building an ecosystem that links influencers to branded campaigns. Essentially, brands that want to use influencers to promote them, to promote the brands or their products, can basically use us to reach out to influencers. At the same time, we also have a live commerce platform that enables influencers to sell products via Facebook Live. We also help influencers create a merchandise store that enables them to sell merchandise to their fans. We also have media, podcast capabilities, basically to enable influencers to increase their fan base, and we have an academy to train them, as well as CSR to help influencers create social impact. We're now creating a dashboard that integrates all of this in a single login, and so that influencers can log in the morning of the day and basically see what campaigns they can run to make money, or what products they can sell on Facebook Live, and then at the end of the day, see how much they've earned for that day, basically. Over the last 14 years, we actually attract and retain a diverse portfolio of blue chip customers. Here in Asia, Milo, Pepsi, KFC, Unilever, P&G, and Danone actually work with us to actually reach influencers. Today, we're building Southeast Asia's largest influencer marketing platform. We have a dominant influencer network leadership position in Malaysia. All the big agencies such as IPG Media Brands, Group M, OMG, and Dentsu have actually appointed us as preferred influencer marketing partners. We are going to leverage on this basically to build a regional influencer network. Currently, we operate in 2 markets, and we expect to grow to 4 to 6 markets via acquisition organically over the next 12 to 24 months. We are then building a centralized technology platform that will incorporate data and insights for these influencers. And we also are then layering on that basically social commerce facilities, which I'll talk about later, as well as fintech capabilities. What we plan to do is actually issue a prepaid card, a prepaid Visa or MasterCard to the influencers, and we actually pay out millions of dollars to the influencers, and we'll actually be paying that out to their prepaid card, so that we'll be earning not only from the income of the influencers, but also from the expenditure of the influencers. With that, we believe we'll be able to build Southeast Asia's largest pan-region influencer marketing platform, and that will enable us to have regional engagements with leading global brands such as Unilever and P&G to become their go-to influencer partner throughout Southeast Asia. Nuffnang Live Commerce is the live commerce platform that we've built over the last year or so. This essentially extends the awareness capability of influencers right down to revenue. In the last lockdown, basically what has happened in Asia is people have actually been selling products via Facebook Live. So if you see on the screen, you see a mobile phone with somebody selling cakes. People were selling, there were sellers selling everything from cakes to seafood. People were actually even selling crabs over Facebook Live. However, when they sell those products, they actually take their orders via private message, and the whole process of taking the order and automation has actually been very slow. So what we have built basically is a platform that enables the automation of that. So when somebody sells the product over Facebook Live, the consumer can watch it, the influencers can interact with the consumers. A purchase code is then flashed. For example, if you want to buy that cake, the purchase code could be CK plus 1 if you want to buy 1, CK plus 2 if you want to buy 2. The moment the consumer basically keys in that and private messages the seller, the platform basically captures that order and then sends a link to make payment. Once merchant receives notification for the payment, he can basically pick, pack, and order the product and deliver to the consumer, or he can have kept that product kept in our third-party warehouse, which will basically pick, pack, and deliver the product to the consumer. With that, influencers can basically focus on just selling the product and not so much on the fulfillment and payment capabilities that are required for the product. Live commerce is actually a very fast-growing industry in China, and Southeast Asia basically mirrors the trend that has happened in China. So in 2018, live commerce actually generated 100 billion RMB in sales. But on one day in 2019 alone in China, live commerce actually generated 20 billion RMB. So it's 1/5 of the whole yearly sales within one day. That's the rate of growth that live commerce has seen in China, and we expect to see the same in Southeast Asia as well. With influencers being a key part of the growth of live commerce, together with our platform, we believe we are basically well positioned to leverage or to grow with that growing trend. So some of the recent progress that we've done for Nuffnang Live Commerce, we've completed integration with Shopify, allowing more than 1 million Shopify merchants to sell their products via video streaming or live video streaming. We partnered with Nivea as a brand to basically sell their products utilizing our influencers. We have a strategic partnership with eShop Live, one of the fastest growing live commerce operators. Basically, they sell products on behalf of SMEs, and we basically took a 5% stake in them while enabling them to basically use our payment, fulfillment, and technology capabilities. So we basically have equity in them, and we also earn a cut of their growth in revenue as well. We also have partnered with Touch and Go, an affiliate of N Financials, which is part of Alibaba, of course, Malaysia's leading e-wallet, and that enables their 16 million users to basically make payments through our platform. We're actually in the process of integrating additional digital wallets as well. So in terms of revenue growth, as I mentioned earlier, in the first half of this year, we actually grew 60%. So revenue in the first half of the year was 5.2 million versus 3.3 million for last year. Our gross profit grew by 34%. Gross margins dipped slightly because as we had larger clients spending more, we actually had to give rebates to them. And so that caused our gross profits to drop slightly. However, EBITDA still doubled with that growth, actually faster than growth. One thing I'd like to note is that the first half traditionally is generally weaker than the second half. So we expect the momentum in the second half to be basically better. And so with that, based on that run rate, we believe we'll be comfortably be able to hit at least $10 million of revenue this year. In terms of operational breakdown, our influencer platform, Nuffnang, contributed a majority of our revenue, 57%. And our growth here was actually boosted by increased spend from anchor clients such as KFC, Unilever, and Dutch Lady Milk Industries, which increased their spend by 11 times year on year in Q2 of this year. Our social media agency, Sashimi, also grew 50%. So we basically help brands all the way from using influencers for awareness to managing their social media accounts to generate engagement, to basically even optimizing their revenue through performance marketing, and now basically generating real sales through live commerce. Our performance marketing platform, Plata and Punta, actually grew 126% year on year, driven by the increased spend on e-commerce from e-commerce clients. In terms of strategic outlook, we're basically pursuing a fast-growing influencer market opportunity as we develop new growth drivers. We see the continued expansion into social commerce, with the social commerce industry expected to double from 2 trillion in 2019 to 4 trillion we would expect by 2024. We see scalability through automation. We've been investing in automation. We brought in a CTO. So this automation will basically help us basically scale while maintaining our overheads. And we also see growth through potential acquisitions. As I mentioned earlier, we intend to grow from 2 to 6 markets. So we've already identified 2 to 3 potential acquisitions that will enable us to grow across Southeast Asia and become the leading influencer marketing platform in Southeast Asia. So in terms of corporate snapshot, we've got a healthy cash balance that will enable us to execute at least some of our acquisitions. We have a strong team of key management. I'm supported by a COO, CFO, and CTO that has a good experience and track record in terms of growing this organization. I'm quite a committed executive chairman of this company. I own 77% in this company, as I actually acquired this business from 2 founders early last year, and since then have actually grown the business and put in the strategy to grow the business. And with that, the share price has done pretty well over the last 12 to 18 months. And we expect with our current growth that we'll continue to see momentum. We're EBITDA profitable with a fast-growing business. And we are operating within the rapidly emerging influencer marketing industry. We're cash flow self-sufficient with comfortable cash reserves. We have a complete business growth ecosystem, providing end-to-end solutions to our clients, not just from creating awareness, but right down to generating revenue. We have a first mover advantage and barrier to entry in this influencer marketing in Southeast Asia. We've been around for the last 13, 14 years. We're one of the pioneers in this space. And our barrier of entry is actually secured by our large social media influencer community in Asia, with a very clear regional expansion strategy. We're trusted by established brands and leading agencies, which is key in succeeding in this business. Also recognized by media and industry. We are led by a committed and visionary entrepreneur, myself, with an experienced board, supported by a management team that has a proven track record. Our new investments into automation and social commerce actually offer potential to deliver scalable growth. With this, we believe we are one of the best investment opportunities in Southeast Asia, basically to expand into the fast-growing Southeast Asian internet economy. The internet economy in Southeast Asia is one of the fastest-growing internet economies in the world, basically, and e-commerce is one of the fastest-growing sectors of that digital economy, and social commerce or live commerce is one of the fastest-growing niches within that sector. At the same time, digital marketing is also one of the biggest or one of the key drivers of the growth of the internet economy, and influencer marketing is one of the fastest growing sectors of that. So we believe that we are the proxy to the growth of this fast growing sector within the Southeast Asian internet economy. That's all for my presentation. Maybe I'll open the floor to Q&A.
Thanks, Ganesh. Still waiting for 1 or 2 questions coming, but I'll just going to kick off with 1 or 2 here. In the markets that you're in, the brands that are coming to use your influencer network, is it mainly local brands operating in that specific national market like Malaysia or Singapore, or is it a combination of those plus, you know, the big international brands who are, you know, trying to do a campaign within Singapore, within Malaysia?
So we generally focus on bigger, today we generally focus on bigger brands, generally because we focus on brands that have bigger budgets that will enable us to grow our revenue. However, we are not limiting ourselves to just international brands. We focus on both international and local brands as well. At the same time, as we basically scale and invest in automation, we basically be also growing our I would say our focus as well, and not limiting ourselves just to the bigger brands, but also to the SME segment as well.
And then a follow-on question from that: the brand segments that you typically work with, is it, you know, FMCG or financial services or fashion? Or, you know, is there particular, I guess, brand verticals you're focusing on, or is it, you know, right across the board? It depends on, you know, the brand and the influencers they're trying to work with.
Sure. So it tends to actually focus on the FMCG segment. Okay,
great. And then, is there anybody else doing what you're doing, but let's say in the US or Europe or across Australia and Z, that, you know, people could have a comparative to, or take a look at how they're doing it in these other markets?
Sure. So there's a company called Tribe that's based out of Australia that's focusing more on developed markets, whereas we actually focus on more developing markets.
Okay, Tribe. Okay, great. And in terms of the growth into, you know, Southeast Asia, does that preclude you moving up into China and Japan, or would you look at those markets in due course?
Sure. So I think to be fair, actually, Japan and China are big markets, but they're also quite I would say they're quite developed markets. Our focus is really on developing markets where there's a lot of growth, right? So within Southeast Asia alone, we've got Malaysia, Thailand, Vietnam, Philippines, Myanmar, Cambodia. So that alone actually is quite a big market. The Southeast Asian market actually has a population of 600 million, right? So there's a lot of us there's a lot of us to basically chew up in these markets before we actually expand to other markets.
one or two coming in here now. Yeah, I guess the negative effects of social media, we see it flying around all the time. Do you see that having an effect on influencer marketing?
Not really. Because look, the reason why influencer marketing has been growing is because the gravity of the internet is actually moving towards social media. During the lockdown, people are actually spending more and more time on social media versus other internet sites, basically, right? So because the gravity is moving towards social media, and the valuation of these social media sites, whether it's Facebook, Instagram, TikTok, are going up. The cost of advertising on these sites are also going up. So influencer marketing is actually being seen as being seen as a more effective way to advertise, a more cost efficient way to advertise, right? So we don't really see the negative effect of social media affecting us. What we're actually seeing more is that the fact that more people are going to social media and that the cost of advertising on these social media sites are going up. People are actually moving that spend to us. Does that make sense?
Yeah, that makes sense. Another question from the audience. Did the founders sell out completely, or do they retain a stake? And yeah, what was their reason for selling and exiting the business?
Sure. So the two founders basically were not getting along well with each other. They actually had a public fallout. So they actually had a bit of a shareholder fight that was quite public, right? So because of that shareholder fight, the company basically, or at least the company on the stock exchange, basically languished. And I came in to basically, I convinced the two founders to basically sell to me because I could provide the strategic direction to grow this business based on my e-commerce experience. I'm basically a veteran internet entrepreneur in Malaysia. I started my first internet company in the year 2000. I knew one of the founders, and so I went to him and said, look, if you guys are fighting with each other, you won't actually be able to grow this business. Let me come in with my experience, buy a majority stake in this business from both of you, and kind of clean up the shareholder table, put a bit of stability to the shareholders. And as I did that, what happened was the management team, who was doing a good job, basically performed even better. And the company basically turned around from a loss-making entity to a profit-making entity while growing 60% year on year, right?
Okay, so
I see another question there. Do you have insights on the use cases for customer translation? Is that mine or is that the previous?
No, that's one for Grant. No, the next one for you, Ganesh, is do you see your EBITDA margin increasing over time, or is the focus now only on driving revenue growth?
No, we do see our EBITDA margins increasing over time. We do have a fixed cost base, whether it's the cost base in terms of serving our influencers, or whether it's which is human resource cost, or whether it's the cost base of maintaining a listed company, right? So as our revenue grows, we expect that cost base to basically be stable. So we see EBITDA margin increasing over time. Of course, over the next 1 to 2 years, we do expect to continue to invest into technology development, whether it's into automation or whether it's into live commerce. We have done that actually in the last 1 year or so. So even though we've been investing into our live commerce business, we actually grew our EBITDA, right? So we expect to continue to grow our EBITDA while actually continuing to focus on technology as well.
Okay, great. And then in terms of looking for influencers to come onto the platform, can you talk maybe about, I guess, how you attract them onto your platform? Is it word of mouth from other influencers, or is there, you know, a dedicated sales team who are trying to engage these influencers to become part of the network and the ecosystem?
Sure. So basically what happens is influencers would come to us, right? Because look, money is the language of conviction. When influencers want to make money, and because we're established in the scene here in Malaysia, they basically come to us and generally sign up organically because they basically want to make money, right? They need to earn a living, and they know that Nuffnang is one of the leading marketing platforms. or influencer marketing platform. And so they come to us and sign up organically. And as they sign up, we basically channel business to them, right? Our sales focus is really on the revenue front, less on the signing up influencers front, because as our revenue grows, influencers will generally just come to us organically, right? We've already, any platform business, a chicken and egg business, I would say we've already got both the chicken and egg. So right now, as we grow, the influencer side is actually the easier part to grow, right?
Okay, and yeah, there's a kind of a follow-on question from the audience on my question. How do you keep the influencers, and are they on a contract?
So we used to keep them on a contract, but right now we find that retaining influencers is not the challenge. We actually see that the moment there's income for them, we actually have an integration to WhatsApp, by the way. So the moment we have a job for a particular that suits a particular influencer, we basically WhatsApp them, and I believe most of the time they just accept the job because it's income for them, right?
Okay, so they're not I guess contracted staff per se.
Yeah, so actually influencers are actually becoming more of a gig economy, if that makes sense, right?
Yeah, no, it does make sense.
It's part of the gig economy, basically.
How are we doing on time? We've got a few more minutes. I'll just leave it here for a second now to see if there's any more questions to come from the audience. Not right now. Okay.
Yeah, so just to add on to that gig economy thing, right? Gig economy part, right? So what we actually want to build is basically the Uber for influencer marketing in Southeast Asia, right? That's what we want to build, basically.
Okay, that's a good analogy to think about it. Okay, Ganesh, I think if we don't have any further questions from the audience, I think we'll leave it there. Thank you so much for joining us from KL this morning. It was great to hear the story firsthand. And yeah, if anybody's got any questions, they can reach out to Tim down in Melbourne, or Angeline, as the email address is there. Okay, with that, I'm going to close this morning's meeting and wish everybody a good rest of their Thursday.